Yeah, what is good, everybody? I hope you all had a fantastic weekend. We're at an interesting spot in the markets all across the board, and we're just going to kind of take a look at what everything is really setting up for us as traders, and where we can make our money. So we're just going to get into it. Make sure to share the video some love, give it a like and subscribe, and let's get into it. So to start off, we're going to be looking at oil. Oil, not really anything new to say. We've been talking about how it's just in a range, and it's going to break out soon. Nothing consolidates forever, especially not a commodity, the major indices. So oil is going to break out soon. It's in a very messy range. It's almost even hard to trade this range kind of because you can see like there's not really a definitive top really. Like it sometimes ends at like 81, sometimes it ends at 82, close to 83ish, and same thing for the downside. So it's a little tricky. But once this thing breaks one of these major lows or highs, so um, it has to break for the upside. It needs to break 83 to 84. If that happens, this it can go so high. I'm talking about like over 100 because all of this energy is just consolidating. Once it breaks out, traders are going to pile in, and it's just going to run it straight up to the skies. And then for the downside, which, in my opinion, is a little more is more unlikely than for oil breaking up to the upside. We'd be looking at the 60s, the low 60s, and possibly the 40s. But um, in my opinion, I'm looking for this to break out to the upside. But if it doesn't, I know what to be looking out for the downside. So still just kind of waiting. This is a really good area if you want to you know, do a straddle. This is pretty much the mid range of the channel, so you can play both sides. Then if it hits that top side of the channel, you sell your long position, hold that short position, sell that short position at the bottom, and there's a lot of things you can do with something that's trading in a channel. So not too much to say, just waiting on that breakout. I don't think it can hold inside of this too much longer. I give it um, 2 weeks tops maybe. So we'll see. Natural gas finally did this bounce. You know, shorts have been making way too much money on this thing. It's stupid at this point how much money shorts have been making. So just kind of to give you a picture, um, I mean it's absolutely insane. So any bounce really is expected, and that's what I've been saying. I don't want to short down here. It's just, we've fallen so much. It's so oversold. Uh, it's primed for a squeeze at some point. So zooming back in here, you can see how I have this labeled as the short entry. Now, if the wave structure was different, if we had this pullback, so wave 3 tends to end at the 1.618 extension of wave 1 and 2. So that's why I was kind of biased for a pullback. No, I didn't say to short here. I said wait for a drop and then one more high to short. And we didn't get that wave 4. So even this high, that drop, I don't think is wave 4 either because it's not really. It just doesn't look clean enough to me. So this still might be all of wave 3. Wave 3 can also stop here, but it's just really extended. So it's really interesting. Maybe this is what we get. So I'm just kind of watching this right now. Uh, Nothing goes up forever, nothing goes down forever. So I would be looking for this to top maybe in like a couple of days, and then pull back, and then see kind of how it holds on that pullback. So this is a pretty big gap. I would expect this to get filled before it really wants to, rip to the skies and go higher. And fundamentally, inflation went up month over month. I believe it was the last inflation data report we had. And, higher inflationary environments, that's going to lead to higher energy costs. So fundamentally, this is looking to go up as well, just kind of based on the inflation data and what that would kind of be tracking. So also for the technicals, this is, I mean, this does not make any sense to be dropping like this. So uh, this is making sense to me. I'm looking for much, much, much more upside. I mean, there is so much to retrace here. So, uh, yeah, we'll see what it does on this pullback. Might want to go a little higher before a nice, decent pullback. So that's what I'm going to be watching. DXY. So we finally hit my target range. I'm actually going to pull up a video of that so you can just kind of see how it's been playing out since then. Now it's just kind of a question of how high can this go. You can kind of see it's going to have some trouble in this region as there's a lot of congestion in this area. Yeah, so we can get above this area. You know, you got this what to deal with, which it's definitely going to be met with sellers. But above that, you know, there's a lot of room to go up here. Just looking at areas of illiquidity, I can see 105 being tested. But really, the main thing I've been talking about is we have to hold this low. So as you can see, I was talking about that 105 region right here, and that's where we got to, and we did it in a rising wedge formation. So what happens after this? Well, it goes down. So you can see, just looking back into the past, this DXY really likes to form these wedge patterns. Breaks out, it hits these retrace targets, which is normally the 50% to that golden pocket. So it missed by a little, but the minimum it really has to hit is the 0.382. So it just more commonly hits the 50%, 60, 1.8 retrace. So for that would look like right down into this region where we were finding a lot of resistance. So we might be coming right back to test that region as support. So I don't think DXY can go up too much longer without a breath. We'll see. It's been forming these divergences, so I would expect the US dollar to get some kind of drop relatively soon. Moving on to Apple, we've been scouting these gaps. We had this gap. Now Apple, it is an incredible stock for trading around gaps. These gaps get filled so consistently, and they get filled relatively quickly. Like just looking into the past, you can see gap here got filled, gap here got filled, gap here got filled. Just look back in the past, you can see it really likes to fill its gaps pretty quickly. But that also depends on the size. The bigger the gap, the longer it usually takes to fill it. So that's just kind of, you know, something you can use to your advantage if you trade Apple. The smaller the gap, the sooner it will probably get filled. And these big ones like this that kind of like activate the start of a major move do take a while to get filled. You can see like massive gap, we kept moving down, kind of took a little bit to fill it. So I think you get what I'm trying to say here. The smaller the gap is, the relatively sooner it gets filled. On the Tesla. So Tesla, I'm looking for downside. You know, we've been bullish since 101. That was where we were looking for a bounce. It was 101 to, I believe it was 92, 94-ish. That's where we were looking for a bottom, and from there I was saying it's going to go for an insane run, and that's what we got. So we've been, you know, once we finally got up into this region, I said we're not going to be able to get above this region, like up to the 230s, massive supply zone, major resistance. This was a support since 2021. You can just kind of see that trend lines as well. This Fibonacci retrace level. So there is an insane amount of resistance right here, and that's just not how stocks work. You can't just blast through this significant of a resistance, this amount of resistance after this much of a move, like straight up with no like retraces on the way up, and the daily is starting to tone down here. So Tesla has been able to kind of fight these like major trend shifts for like a few weeks, a few days. So this could potentially, you know, this is a pretty high area of incentive it could get to. So like 230, 240, major supply zone. You got that fib level here. I believe there might be a gap somewhere. I might be wrong about that. You have a gap up here, but that's kind of high. So I think the general structure we could be looking at is a high into a low into another high potentially to fill that gap. So that's kind of the general structure I'm looking for. It really can't go much higher without a retrace. And after that retrace, we'll see if it can hold support and then bounce to eventually go higher. So this is probably going to take a couple months to play out, and I think that's going to be the structure we're looking at on Tesla. Amazon. So all the way back here, we were looking for this gap to get filled. Once we filled that gap, we were looking for some downside. We were just kind of like, all right, let's wait it out, see what it wants to do now. I showed you those areas of incentive that it would probably want to get down to. A lot of it revolved around this demand zone. So you can see this volume node that really sticks out other than any other kind of zone is going to be that major major area of incentive for traders to trade around. So that's where we are right now. We might manage to get a little lower down to around 90, but that's what I was saying. We're probably going to drift down into this region, and that's what's happening right now. So Amazon, I was kind of taking a look at this earlier, and I can't really see too much here. Like if it wants to bounce and then go higher, you have a lot of gaps up here, so that's a pretty good incentive to move up and fill those gaps. But besides those gaps, I really don't see too much of like too many signs for a direction that it wants to move into. So we were confident about that bounce, and now it's just kind of, what does it want to do? We just kind of need to wait for more price action, more structure, and just have a little more to work with. So biotech here, this was kind of a free money play we were talking about. Once it broke that trend line, it was going to get annihilated, and it finally did. We were looking for this head and shoulder structure, and it didn't even manage to pull off that second shoulder, and it's moved down into this trend line as support. So this is a major support here. This is very, very likely going to bounce, and that would result in LabU bouncing. So I actually might trade this. I might go long on this with the stop loss below. That's sort of far away, farther than I would like it to. So the closer I can get an entry to this low right here, the better. So maybe we get a little more downside, but once it starts getting down here, that's going to be looking like a buy to me, and I will probably take that entry because this is oversold. You can see it's had some pretty decent downside. Let's pull up the RSI so we can just kind of see how oversold this is. Yeah, so you got divergences forming on the 1 hour lower time frame, but it's very likely to hold this region and get a bounce. Regardless if it wants to go lower in the future, this is a literally vertical move to the downside. So if it wants to go lower, it probably needs to bounce before that. So looking for a bounce on this. The risk reward is looking really good once it starts getting closer to that low. So semiconductors really kind of doing as we expected. It hit that 100% extension of the A wave, so the C wave is equal to A, and we were looking for immediate downside, and that's what we got, immediate downside. We hit that, and it just went straight down. So now we're kind of looking at these medium shorter term patterns it's forming. So this is an expanding wedge, and the interesting thing about this is that expanding wedges normally break out of the side that is less steep, and you can definitely see which side that is. Like if it broke this line, it would literally just go straight down, and it would be a flush. But normally it tends to break the side that is less steep. Now, normally I would like to see it oscillate closer to the upper trend line, but it's a little far away, so it's not really telling me anything. But normally it would be oscillating closer to this line while it's kind of riding down. So what I'm trying to say here is that normally it oscillates in a much wider range, and in this scenario it's kind of hugging that lower trend line. So kind of interesting. I'm not too sure what to think about it, but on the macro scale, from the macro standpoint, this box right here is what it needs to hold, because if it doesn't hold it, it invalidates this Elliott wave structure. So you have your 1, 2, 3, 4. If you break the high of wave 1, if you break into the territory of it, it's not 5 waves anymore. It's an ABC, and that's corrective, which would mean it's going to literally go free fall straight down. So this is a really important zone, and this is also going to be a telltale sign for the whole markets overall. So watching semiconductors, this will give you a really good picture. To keep it simple, I would say the maximum threshold this needs to hold is I would say 390. So if SOXX is getting below 390, that could be the signal that the markets are about to literally just free fall, with no relief for probably a few weeks. So keep your eye on this thing. VIX, not too much to say. Broke out of this wedge, hit that golden pocket target like I was talking about on the DXY. It tends to go to the golden pocket or the 50%, and the minimum it usually goes to is 0.382. I would say like 1 out of like 15, 1 out of 20 wedges, it doesn't get all the way to at least 0.382. So yeah, pretty high probability pattern here. The wedge always gets to that 0.5 or that golden pocket. So not too much to say here. You got this unfilled gap here that's down at the low 20, so it's likely going to fill that. VIX is pretty much like notoriously known for just filling the gaps almost right away. So keep your eye on the low 20s. If it manages to hold this gap area right here, you could see something where it hits this and then continues higher. So keep an eye on that. If it goes under, there's a good amount of support, and there's going to be a lot of buyers in that region. As you can see in the past as well, it's a pretty big area where buyers step in. So I don't think it's going to be easy for VIX to just break down to this area. If it wants to break down to this area, it's going to need to do it in a process where it's kind of like, it won't be just like a knife straight down. So keep your eye on that gap fill, and we'll see what it does after that. For the overall market, SPY, it's a very tricky spot. So in my last week's video, I was looking for immediate downside. Just go look at my thumbnail, and we dropped. But now the way it dropped is not the way I would have liked it to. So there's a couple of things that can happen here. One, so I don't really have a bias as of now, and the general, I guess, idea of for my next, I would say maybe probably 2 to 3 weeks, I'm probably not going to be taking a position. I won't be taking a position looking at kind of the next big move. Like down here, I was really bullish. I was saying we're going to 4,200. That's what happened. We hit 4,200 and we died. And now so I have it all drawn out on SPY futures, and you can kind of see it's really hard to tell what it wants to do. So I think it needs to have one more high. So maybe something like that. Kind of test this resistance up here. But the point is that it's not in a clear setup. So what I like to do with my trades is I don't really take low probability trades. That's just not what I do. I don't really gamble. If you're in the Discord, you know what I'm talking about. I love trading those 5-wave setup. When you see a clear 5 waves, I'll show you an example of that in a little bit, just so you can really see how it is such a safe setup that is very consistent. You can play it across commodities, stocks, the indices. So anyways, there's a lot of paths here. We can get a bounce and then go lower. We can also, I think, from here we can actually just keep going lower and then a bounce. So I really don't know what to say, just kind of in the shorter, medium term. There's just a lot of different things it can do right now. So I think the big level to watch on ES is going to be this line right here. So that's going to be around 40.60. So 40.60, keep your eye on that. That's going to be a major pivot level. Where if you break above it, test your support and hold it, you can see immediate upside, and then rejection off of it, you can see a new low. But it's a very awkward spot, so I have no confidence in kind of what I want to say what will happen in the next few days. So I'm just going to be waiting for a better setup. So on the SPY, I'm going to show you those 5-wave setups. So watch this. I promise you. Just trust me. Watch what I'm going to show you here. So we're going to zoom in here. So this is where I'll day trade, and these are the setups that I trade. You get 5 waves down, you get an immediate reversal. 5 waves up, you get an immediate reversal. So kind of the same thing with wedges. It's there's a reason it's called the golden pocket, the golden ratio. Just look up or message me, drop a comment in the comment section. I'll send a link for these Elliott Wave PDFs that I learned how to trade Elliott Wave with. So after 5 waves, it will always retrace. That's just how it works. You get 5 waves down and you retrace. So in the Discord, I'm going to pull that up quick. So here's just kind of the walkthrough of this 5-wave setup that we had. So it's very tricky. So the issue with trading the only issue there is with trading a 5-wave count is that sometimes the wave 3 tends to be longer, the longest wave, and so sometimes that will mean what you see as potentially 4 and 5 is still just 3. So that's what happened in here. I started my long position early, and the 3 extended down a little farther. So regardless, I was looking for a major move up. You can see that's like $2, and you know, you can just kind of see me tracking it on the way up. I said the A wave's gonna end soon. The A wave ended, and trying to construct the C wave. And I gave the sell targets, and you just kind of scale out as you hit those targets. So first wave, or first target hit, I preferably wanted that second target, and you can see it played out perfectly. That's just how the waves work, and I managed to get all the way back to the golden pocket. So that's just how the waves work. 5 waves down, 5 waves up is going to result in an immediate reversal. You just have to make sure that the 4 and 5 is not still wave 3 playing out. So just an example, these show up all the time, everywhere, down to the smallest scales. Like this is, I don't want to get too much over it, I don't want to get sidetracked, but my point is this is my favorite pattern to trade, 5-wave setups. They are so consistent. It's how the market works. Everything revolves around this. So yeah, that's kind of just an example I wanted to show you. And an extra thing I also wanted to show you guys is this technical setup on Coinbase here. So I am kind of like neutral on this. You know, it's been sideways for kind of a while, and I don't really have a bias to which way it would want to go. It looks more likely to go to the downside, but there's a chance it could rocket up. So I think this is a pretty good stock to do a straddle on with, you know, just kind of tight stop losses on either side of your straddle. And once that side gets hit, you just let the other side run. So Coinbase, it's definitely going to break out soon. This is it's consolidating very tightly. So keep an eye on this thing. Gonna break out soon. And I don't really have too much else to say. The markets are at a tricky spot, so it doesn't hurt to be patient. Sit back, let it do what it wants. That's what I'm gonna do. I don't know what it wants to do. It's very messy right now. So while everyone else is stuck trying to trade those 0 days till expiration options, just trying to catch the bigger move while being caught in all of this chopping action, I'm just gonna be sitting on the sidelines, stress free. So that's where I'm going to leave this video. Make sure to show the video some love, give it a like, and subscribe if you watch the whole thing through. And peace out, guys.